This will signal the bear market's halfway point. I'm Bob Stokes with Elliott Wave International. On March 12th, the date the Dow Jones Industrial Average closed lower more than 2,350 points, the U.S. chief equity strategist for a major financial firm appeared on Bloomberg after the market closed and opined that 90% of the damage has been done. He went on to affirm that if an investor's time horizon is longer than 2 weeks, then yes, the stock market plunge represents a good buying opportunity. Well, if that's the sentiment after the Dow, which had more than 28% through March 12th, then the downturn may have ways more to go than just another 10%. In other words, such financial confidence is usually not the prevailing sentiment near the end of a bear market. Now, granted, this was just one opinion, except it isn't. The chief equity strategist's sentiment is just one example of an entrenched financial optimism. As our March 11th Elliott Wave Theorist says, as yet, fear is nowhere near epic. Relative to the size and breadth of the down days, trends have been remarkably low. All moving averages from 3 to 55 days are between 1.00 and 1.30, indicating nearly equal volume distribution in down stocks versus up stocks. In other words, there has been no panic. How do you know when a bear market is past its midpoint? Answer: when people stop cheering for lower prices. A Bloomberg article reported Vanguard's VOO attracted nearly $4.2 billion so far in March. What is the VOO, you ask? It is an exchange-traded fund representing the S&P 500 that is commonly used by retail investors. The phrase, so far in March, means just over the past 7 trading days. Inflows in the down month of February were $8.3 billion. The graph tells you all you need to know. Each day, people think they are buying a low. When the real low arrives, they will be selling. The scores of technical indicators that our analysts study are revealing a lot about the potential depth of the unfolding bear market. Of course, our primary analytical tool is the Elliott Wave model. It tells us that even though the market's recent dramatic behavior is rare, it is not unprecedented, meaning we can see one or more scenarios of how things will progress from here. And as always, we are sharing our findings with subscribers. You too can learn how similar price patterns have unfolded in the past, so you can prepare for what's likely next. Follow the link below this video to learn about EWI's risk-free trial.